Well, to help us decode the strategy for the year ahead, we have Vineeta Sharma, Head of Research at Narnolia Financial Advisors, joining in. Vineeta, before we talk, about specific stocks, specific sectors, talk to us about, the kind of outlook that you have for 2019, because 2018 has turned out to be a very, very volatile year. In fact, just a short while ago, the indices turned negative for the year overall, and most retail investors particularly do see their portfolios in the red at the moment. Can we expect 2019? We know we have Lok Sabha elections coming up as well, but can we expect 2019 to be as a volatile year as the year that we've seen already?
Yeah, hi, good morning everybody. First of all, regarding Nifty outlook, we have already seen, as you said, that it was very volatile. 2018 was a volatile year as such, and with the negative, sort of a negative return for the market. And 2017, if we look back, it was a very high volatile, low volatile market with high positive returns. 2019, I suppose, should again be a low volatility market. To start with, definitely with the coming elections and the domestic macros, we will find some volatility. And but then that should ease during the later part of the year. Regarding Nifty, we are expecting 2020 expectation for Nifty EPS at around 620. And we have already seen that the market, has made very sweet bottom and top, I would say, because 11,800 is a Nifty target for calendar year 19 or FY20, you can say, which is around 19 times FY20 expected EPS. And the low that we saw, 10,800, should be the base for the market going ahead. So we are expecting a 20% earning growth for at Nifty EPS of 620 for going forward, and 11,800 should be the Nifty target going forward.
All right, 11,800 is the target for the Nifty in the year 2019, and of course we're looking at earnings growth of 20% to follow through. Let's start then with some of the heavyweights in the market, and that is the banking sector, because this is where we've seen quite a bit of pain. For the last few years, Vineeta, it's been the PSU banks where we've seen a lot of negative sentiment. There's been the big cleanup of their books, but this year we actually saw a lot of negativity come in for the private banks and some of the large private banks. Whether it's on account of the RBI not giving the MD and CEO the kind of extension that they were looking for, a succession uncertainty at names like Axis Bank, Yes Bank, and of course ICICI Bank. This was really the story of the first half of the year. Talk to us about what you're making of select private banks going into 2019.
So in fact, I would reframe the question as to what are, because we have a clear view on how the corporate lenders will be doing forward. So in terms of the PSU banks, I think in the what we have in the PCA categories, we expect Bank of India to come out of the PCA the first, if the norms are relaxed and if things come in favor. As regards the corporate lenders, we are expecting, Nivrita, that going forward, most of the pain is now getting over. Federal Bank, if you see, it is, the top whole corporate lenders is 80%, 70% is in the AAA rated funds. If you look at Axis Bank watch list, the watch list has reduced, and most of the slippages are coming from the overall watch list that the company has given. We are finding corporate banks to be the next medium-term outperformers, I would say, because we are believing that most of the NPA provisioning has been done. Considering the advances growth, if you look at ICICI Bank with all the problems, even last quarter, ICICI Bank gave a growth of 12.5% plus for the advances, as against where it was hovering around 6 to 7% growth in the last year. So we are expecting good advances growth coupled with the NPA provisioning that should get over. I think there is room for a good amount of PAT growth, which will help the book value growth for the corporate lenders. And once the book value growth comes in, definitely all the valuation multiple should also go in for re-rating. We are liking, amongst the corporate bank, we are liking ICICI Bank right now.
All right, any target that you have in mind then for an ICICI Bank going into 2019?
ICICI Bank right now we are expecting it is trading around 2.1 times FY20 price to book, and we have a target price of around 400, and we have some estimates as to it can be a positive surprise also, because we have already seen the PCR is right now at 69%. The advanced growths are coming in. Slippages, whatever slippages are right now, I think in 2019 will be another year where some more provisioning will be there, because there are still some bulky stress assets in the book. But 2020, it will be, it will be coming out clean. Management will now, they'll have a focus shift from where they're expecting. Right now, the whole focus is in the asset quality and stuff. So once the focus shifts towards the growth side, I think it will all play in. So we are expecting a 400 sort of a target in the medium term.
All right, that's a target of 400 coming in for an ICICI Bank. In general, the expectation, like Vineeta was pointing out, is that 2019 will be better in terms of a turnaround for those corporate-facing banks as well. Let's talk about autos then, Vineeta, because this is a space that has seen a fair amount of pressure. We just got through the festive season, and it was a subdued one this time. There's the fact that raw material prices have played major spoil sport for some of these companies. What do you like in the auto space, and can we expect the things to be looking up going forward from here?
Auto space right now, Nivrita, is facing 2-3 headwinds. One is the volume growth, which is a little bit subdued. And festive season little subdued because of shift of festive, but that's not that big a concern. But and the second concern, one is the volume growth, which is tapering little bit, and second is the realization of the margin growth. So because of high competition, not only the realizations are going down, but also the raw material prices are weighing on the margins. So overall, it's in a that kind of a state right now where very high PAT growth we are not expecting for the auto companies. Amongst the auto companies, we are liking Mahindra and Mahindra, because if we look at the way the company is getting structured. One is the passenger vehicle segment, wherein they are expecting, they have come out with new launches, and I think the latest Alturas, I'm not very sure because numbers are not there in my hand how the demand is panning out. But Marazzo, which was launched some time back, it is again having a 6 to 8 weeks waiting time, and the demand there is good. So passenger vehicle segment is doing well. Apart from this, the farm equipment segment, which the company is expecting that the contribution where there is a high margin, the farm equipment segment is a high margin business, that they are expecting the share of revenue to grow from 35 to 50%. The exports also they're expecting to 37% is the current export percentage of the overall books right now, and that they are expecting to take it to 50%. So we are expecting some kind of good volume growth going ahead. Definitely margins will be under pressure, but then company is taking some cost reduction techniques to control. So I think margins would not be very dampening going forward for Mahindra and Mahindra. Considering the overall macros, if we see the increase in MSP or the water level increasing in the reservoirs, which will help the farm equipment segments to continue delivering better returns. So Mahindra and Mahindra, I think along with all the subsidiaries are doing pretty well. I think it should be a fair bet in the auto segment.
All right, so that's an M&M. That's the top pick as far as the auto space is concerned. It's still in positive territory for the year, but overall, the Nifty auto has seen a sharp cut, in fact, down in excess of 20% if we look at it year to date. So clearly, that's the outlook as far as banks and auto are concerned. But Vineeta, any other specific stocks that you have on your radar going forward into 2019?
So one sector which is the most talk about sector right now is the NBFC segment, and especially in the housing finance segment, because from the retail point of view, there has been a lot of questions that has been coming up to me. So I would suggest at this point of time, one can start accumulating Canfin Home, because the overall structure of the NBFC right now, we all know that it is facing liquidity crisis, and the overall yield should get down, and there are cost pressures. But if we analyze Canfin Home right now, so it has a good parentage through which the liquidity crisis would not be a very big problem for this kind of a company. And secondly, the growth as such had moderated for Canfin Home, because 50% of the Canfin Home books, advances books, are from Karnataka region, wherein RERA implementation was a little slower, which had hampered the growth of advances growth to around from 30%. The growth had reduced to 18%. So now we are expecting that to turn on, as well as the company had already taken some price rise or interest on the products. They have already increased the interest rate, so yields will increase as such. Currently the bond yields have also gone down, and once if they stay around that level, I think the margin pressure that we are expecting should ease. Secondly, they're also getting some support from NHB refinancing, because there also the limit has been increased. And then I think overall the yields or the NIM should not be compressing much from here on. So asset quality is good. Advances we are expecting going forward good enough, and yields should at least not go down. So Canfin Home at the current prices, one can start accumulating. And one more stock I would like to talk about is Zydus Wellness, wherein it is recently acquired Haynes India business, and I think the overall prospects for Zydus Wellness with the acquisition of Nycil or Complan, they all should bode very well for Zydus Wellness going forward, because Zydus already has the channel towards the medical stores, and with Haynes India they'll get the rural backing for the distribution. Any FMCG company which is placing the distribution strategy well is a clear beneficiary here on. So we are expecting Zydus to be a very game changer sort of a story going forward.
So that's Zydus Wellness, especially on the back of the Heinz India acquisition. Of course, most recently we had the Competition Commission of India give its approval a couple of days back also for this. Of course, this is a deal that was signed back in October. So good news for Zydus Wellness. And of course, Canfin Homes is the other pick there from Vineeta as far as the NBFC space is concerned. Specific targets you have, if any, for both the Zydus as well as Canfin Homes?
Zydus, it can be a little volatile as such, because the Q4 only the whole strategy and the whole thing will get implemented. But I think still 15 to 20% upside in the near term, in a 1 year time frame, we can easily expect. And Zydus can be accumulated from a long-term investment point of view, because things will pan out gradually. So it's a story that you can hold on for a longer period of time. And for other company, Canfin Home, again a 20% upside we can safely assume in the current, because the price to book right now is to around for FY20 book value. So around 20% upside we can see in Canfin Home too.
All right, so about 15 to 20% upside is what we're looking at for the names that we've discussed. Vineeta, thanks so much. I always appreciate your perspective. So we can look forward then to a better 2019 than 2018, at least in terms of volatility. Vineeta expects that it will be a much improved picture compared to the year that we've seen already. That's the view coming in from Vineeta Sharma, Head of Research at Narnolia Financial Advisors. But let's go across